Hi, in this video, I'm going to talk about self-employment tax, which is called a SE tax. So basically, self-employment tax, I'm talking about federal tax here. So federal tax filers pay 15.3% Social Security and Medicare, which is also called a payroll tax as both employer and employee. Let's see what I'm talking about. So basically, say if you are working for a company, so for Social Security, you pay 6.2%. So as an employee. So then for the Medicare, you pay 1.45% as an employee. So total is 7.65%. So as an employee, so that's your payroll tax, which is Social Security and Medicare tax. So if you are self-employed, when you are self-employed, you pay both, the employer and the employee. So your Social Security, you pay 12.4%. So for the Medicare, is 2.9%. So for Social Security, no matter you are self-employed or work for a company, so there's a cap. In 2021, the cap is 122,800. So also have an additional Medicare tax, which is 0.9%. This is addition to the 1.45% this Medicare tax. So this one is only employee pays. So for you self-employed, so you only pay 0.9%. So when your income subject Medicare income is more than 200,000 for single, you have to pay 0.9% additional Medicare tax. So if you are married filed jointly, so if you are, Medicare income is more than 250,000, so you are subject to additional 0.9%, right? So basically, that's self-employment tax. So that's how much you're gonna pay, 15.3%. So, however, the IRS actually give some deductions, some exclusion for self-employed. So not exactly you are paying 15.3%. So the following, I'm doing example. You can see sometimes you can pay much lower than this 15.3%. So many people have strategies how to avoid this payroll tax. Sometimes when you are, when your income above certain level, it's not necessarily for you to avoid it. So let's say an example. So this is self-employment tax short calculation. So this is Joe. He's married file jointly. However, this filing status is not affecting self-employment, so it's only for for income tax, right? So for his self-employment, so he is a sole proprietorship, so he has a income which is on his Schedule C, net income. Self-employment, $350,000, right? He has $350,000 net income. So this one, so your 15.3% is not on the 350%. So let's see how you calculate the self-employment tax. So first of all, this is 350 from your Schedule C net income, right? So IRS say, well, I'm giving you a break. So you all, I'm only allow you, pay self SE tax on the net earnings for self-employment tax. I allow you to deduct 7.65% as an employer which is on this amount 350. So you can see this 7.65 times 350, you would get a 26,775, right? So then you minus this, you would get earning, net earning. This is for social for your SE tax base, right? This is net earning for self-employment tax purpose. So your net earning, however, your net earning, this amount is above 142,800. This is a Social Security cap, right? So anything above this one, you're not going to be subject to Social Security tax. So you only up to 142,800. So this one will be taxed 6.2% times 2 is 12.4%, right? So you are being taxed on this. So your Social Security tax for self-employment is 17,707. How about the Medicare? Medicare, you for the net earning, you apply to net earnings for self-employment tax purpose. You being taxed 2.9%. This is 2.9% on the entire net earning amount. Be careful, it's not 350. It's not the number from your Schedule C. Okay, and so this is, you can get the Medicare tax amount is 9,374. So, however, because your net earning, this amount is above 250,000, right? So then you are subject to additional Medicare tax 0.9%. So this one you times the excess amount times 0.9% give you 659. So this is additional. So you add these three together, you would get $27,740. So you can see this number is not like a 15.3 times your Schedule C amount, right? So this number is much smaller, right? So this is how you calculate your self-employment tax. So then also it's IS not only allow you to deduct this amount to reduce your, the base of your self-employment tax. They also say, well, this is your entire 27,740. This is both as an employer as employee tax. So 50% of this you are allowed to deduct on your income tax. Be careful, this is self-employment tax. So it's different from income tax, right? So say this is allow you to deduct the 50% on your overall income tax. So when you apply income tax, which is on the form 1040 300, so will be used 350 this number. However, this number will be reduced by 50% of this number. We'll see here. Actually, I was wrong. Okay, so actually you only add this one. You don't get 50% of the additional Medicare tax. So later, actually, I'll make another video to show you how to fill out the form to report all of this. Okay, so then this one, so you can see here, so only your Social Security and the Medicare original Medicare tax, these two, you add them together, so then you will get the amount SE tax. So you get deductible of 50% of this SE tax, which is 13,541. So you get so you can see this one will reduce your marginal income by 13,541. Your marginal income tax rate is 24%. So you will save income tax. You will save $3,250,000, right? You have to understand, if you're employee, you don't get this because you are self-employed. Employee that you get deducted as an employer side, so you get save $3,250,000. So then your original, SE tax is 27,740. So you minus this amount, 3,250, you will get, the real SE tax is only $24,490. So you can see, if you use this total SE tax divided by your net income on your Schedule C, you can see you only 7%. So the total SE tax is only 7% of your net income on your Schedule C. So I just want to compare, say, if you are employee, if you make $350,000 as a salary, right? So then you will pay the Social Security. You are capped to only pay $142,800 on the 6.2%. So this is your Social Security tax. Then this is your Medicare tax, is 1.45%. Then you have additional Medicare tax, is $900. So you add 3 together, you would get 14,829. So basically the percentage of your salary is 4.24%. So you can see it's still this one, as an employee, you still lower, right? Paying lower, but however, it's not that much lower. This self-employed is only 7% as well. Anyway, so the main thing is a lot lower because you reached the cap of the Social Security. That's why it's lower. If you, let's say, if your Schedule C net income is only 140,000. If you only have 140,000 income, so then your SE tax reduced with deductible, even I take out the deduction from your income, is at 17,605. So this will give you 12.58. So you can see, compare 12.58 with the 15.3%. So it's still lower. So just keep in mind, so when they say, well, you pay Social Security and Medicare tax, both, is at 15.3%. So it's not really exactly 15.3% on your, Schedule C income. So it's have all those, reductions, deductions. So eventually you get saved a little bit. So 12.58% really is the rate amount you are paying. So you are not paying 15.3%.